Welcome back. Here's a look at where markets ended another wild week, with the NASDAQ falling into correction territory this week. Treasury yields nearing 5%, and 1/3 of the S&P 500 reporting quarterly earnings. We also saw the economy in the third quarter grow at its best pace in nearly 2 years, up 4.9%. Well above expectations. And the Federal Reserve's key gauge showing inflation is slowing. Core PCE inflation grew 3.7%. That is the slowest annualized rate in more than 2 years, but still well above the Fed's target of 2%. Joining me right now to talk more about that is former Kansas City Federal Reserve Bank President Thomas Hoenig. Thomas, it's great to see you this weekend. Thank you for being here. Can you assess where we stand on the economy today, looking at where inflation is, looking at where growth is ahead of the jobs numbers coming out in the week ahead?
Well, I would tell you the GDP numbers were, of course, very pleasing to most people. 4.9% is an incredible number given the conditions that we've been through. The consumer was a big part of that. Everyone knows that. And I think this reflects the very strong government programs over the past couple, 3 years, but it's particularly the infrastructure bill, the CHIPS bill, the reduced inflation bill that was really a huge subsidy. So that stimulated the economy. And I also think that in this environment, the Fed is kind of figuring out what they want to do next, and that is they're hoping, they very much want that soft landing. That's why I think unless inflation increases. So the PCE that came out was well above 2%, but very little unchanged from the last August report. And so they're going to be cautious. They're going to wait and see. And I don't think we'll see an increase coming up here in the next week. But they have another tool, and that's quantitative tightening, which they're leaving in place. And quantitative tightening in an environment where the government is putting more debt into the market should be raising interest rates, and it has so far. And they're going to let that continue for now. So as you look at this, the economy remains strong, but it should be slowing. But I think the job number coming up will still be strong given this last report, and then taper off after that. And I think, if I could just say, Maria, I think there's 2 to 3 things that have to happen before the Fed lowers rates. Number one, we get inflation down to 2%, and we have the magic soft landing. I don't think the odds are high on that. Second or third is we have a recession and the Fed will ease, or we have a banking crisis or we have a banking crisis and the Fed will ease greatly. In the meantime, it's going to go very slowly. I don't think we're going to see rates increase much more than they already have, unless inflation spikes, and then they'll have to deal with that. But other than that, they're going to hope for the soft landing. That's how I see their policies relative to the economy.
What are they watching mostly? Is it the consumer and the strength of the consumer that is keeping things elevated? Because I think a lot of people were expecting that slowdown to be quite transparent by now.
Yeah, I think the consumer has been the surprise for them. The consumer spending has been very strong. They've been willing to go into debt given the current situation, given their past experience with the pandemic. Also, the fact that the government tends to come in more now and bail out the economy. So they have that, I think, on their mind. Consumers are learning that as well as banks. So those are factors that I think keep the consumer in place. It's a matter of now the past tightenings, whether they will have the effects that are intended, and they should have, and the effects of quantitative tightening, which, given the amount of debt that's being issued by the government, which means you have to pull that out of the private sector, means interest rates rise, and that further slows the economy. So those are the sorts of things that we have to watch for, and the Fed, I know, is watching for at this time.
Oh, we'll be watching as well. Thomas, it's always a pleasure. Thanks very much for being with me today.